Apple built its reputation on control. Control over design, control over software, control over the tightest, most disciplined supply chain in consumer electronics. For almost 2 decades, that control meant Apple rarely had to react to a component shortage. It planned around one before the rest of the industry even noticed it coming. That changed this year. A memory chip shortage, driven almost entirely by the artificial intelligence boom, has done something remarkable. It has pushed Apple to publicly raise prices in the middle of a product cycle, and it has pushed the company to lobby Washington for permission to buy DRAM from a Chinese manufacturer that sits on a Pentagon watch list. Not as a hypothetical, not as a rumor floated by an anonymous blog. According to reporting from the Financial Times and multiple outlets that followed it, Apple has already started qualification testing on memory chips from Changxin Memory Technologies, CXMT, China's largest domestic DRAM producer, for devices sold inside China, while simultaneously pushing U.S. officials for the political cover to expand that relationship further. This script is about how a company famous for never needing a backup plan ended up here, and what it means for everyone who is about to buy a laptop, a tablet, or eventually a phone. Before any of the CXMT reporting broke, the first sign of trouble was on Apple's own price list. Apple almost never changes prices mid-cycle. It builds a lineup, sets prices at launch, and holds them until the next generation arrives, sometimes for a full year, occasionally longer. That predictability isn't an accident. Retail partners plan inventory around it. Customers compare configurations around it. Apple's own margin targets are built around it. Changing a price outside of a launch event is, for Apple, a deliberately rare event. This year it happened anyway, and it happened across the lineup, not on a single product. The entry-level MacBook, the model Apple positions as the on-ramp for students and first-time buyers, moved up by roughly $100. Storage-heavier MacBook Air configurations saw increases in the same range. The entry iPad Air moved up by roughly $150. Beyond Macs and iPads, HomePod and Apple TV pricing shifted as well, which matters because those products carry far less memory and storage than a laptop, a signal that this wasn't a one-off adjustment tied to a single expensive component, but something closer to an across-the-board repricing tied to the underlying cost of memory itself. Apple's own explanation, delivered through its public statements and reinforced by comments its leadership made to financial press, was blunt. The company could no longer absorb the pace and scale of the increase in memory and storage costs. That's a notable admission from a company that has spent a decade telling investors it manages its supply chain more tightly than anyone else in the industry. When Apple says it could no longer protect customers, it is really saying the component market moved faster than its hedging, its long-term contracts, and its purchasing leverage could keep up with. Reporting from the Wall Street Journal captured just how unusual that admission was. Tim Cook told the paper, in comments given directly to reporters, that in more than 4 decades around the electronics industry, he had never seen a component cost environment shift this violently, this quickly. That's not marketing language. That's the head of the most powerful buyer of consumer electronics components on the planet saying, in effect, that the ground moved under him. And notably, at the point these increases were announced, iPhone pricing had not moved. That distinction matters, and we'll come back to it, because it tells you something about where Apple thinks the worst of the pressure is concentrated, and where it's trying hardest to avoid it spreading next. To understand why a company as disciplined as Apple would rather raise prices than stay quiet, you have to understand what memory pricing actually looks like from the inside of a hardware company. Apple doesn't buy memory chip by chip on a spot market like a small system builder might. It negotiates long-term supply agreements, locks in volumes years in advance, and uses its purchasing scale, hundreds of millions of devices a year, to secure pricing that smaller competitors can only dream of. That scale is usually Apple's biggest advantage. It's also, in this specific situation, part of the problem. When an entire category of component becomes scarce, not because of a factory fire or an export ban, but because a completely different industry is buying it up in volumes nobody modeled for even Apple's negotiated contracts eventually roll over into a repriced market. Long-term agreements get renegotiated. Spot prices bleed into contract prices. And when the underlying commodity has genuinely tripled or come close to it over a year, no amount of negotiating leverage fully insulates the buyer. Apple had 2 options once its own cost base moved. absorb the hit and let it eat into margin, or pass some of it to customers. Historically, Apple has preferred to protect margin by trimming other costs quietly, rather than raising sticker prices. That it chose visible price increases instead tells you the size of the cost shock was too large to bury in a spreadsheet. It had to show up on the price tag. It's worth sitting with how strange this is, competitively. Apple's entire premium positioning is built on the idea that a customer pays for the integrated experience, not the raw materials. When Apple starts publicly attributing price increases to a specific input commodity, it's implicitly conceding that the input cost has become large enough, relative to the device price, to matter to the bottom line, something that almost never happens with premium hardware brands, which usually treat components as an invisible back-end detail. None of this happened because DRAM factories broke down. It happened because a different customer, the AI industry, started buying memory at a scale the consumer electronics world never had to compete against before. Here's the mechanical reason why. A modern AI accelerator is only as fast as the memory feeding it. Training a large model means moving enormous volumes of data in and out of memory continuously, keeping thousands of parallel processing units fed, so they're never sitting idle waiting on data. Inference. The process of actually running a trained model to answer a question or generate an image is memory hungry too, because the model's full set of weights has to be read again and again for every new piece of output the model produces. The memory technology built specifically for this job is called high bandwidth memory, or HBM. It's not a new type of chip so much as a new way of stacking and packaging memory dies, so they can move data at speeds ordinary DRAM modules were never designed for. And it has become, arguably, the single most valuable product category in the entire semiconductor industry over the past 2 years. Samsung, SK Hynix, and Micron, the three companies that have dominated global DRAM production for a generation, are now pouring enormous capital into HBM specifically because it commands margins that conventional DRAM simply cannot match. The problem is that HBM isn't manufactured in a vacuum. It draws on the same wafer capacity, the same advanced packaging lines, the same process engineers, and the same factory floor space that would otherwise be producing ordinary DRAM and LPDDR, the exact memory that goes into laptops, tablets, and phones. When a factory has to choose between allocating a production line to HBM destined for a data center customer paying premium prices, or allocating that same line to consumer-grade memory destined for a laptop maker operating on thin margins, the decision isn't complicated. AI customers can justify paying extraordinary prices because a single server rack full of accelerators can cost more than most people's houses. A laptop manufacturer cannot follow that logic without pricing itself out of the market. So capacity drifts toward the buyer who can pay the most, and everyone else competes for what's left. That's the mechanism behind the number that kicked off this entire story, a nearly 60% surge in standard DRAM contract pricing in the first half of this year, with some individual product lines, like the LPDDR5X memory used heavily in mobile devices, reportedly climbing even further, more than tripling from where they stood at the start of last year. Different trackers report different specific percentages depending on the exact memory type and time window, but the direction and the scale are consistent across every source. This is not a routine cyclical uptick. It's one of the sharpest, fastest memory repricings the industry has documented in years. Apple's price increases on Macs and iPads are the most visible consumer-facing symptom of that shift. They almost certainly won't be the last. Enter Changxin Memory Technologies. CXMT was founded in 2016, which in memory chip manufacturing terms makes it an infant. DRAM is one of the least forgiving markets in all of semiconductors to break into. Success depends on nailing process control at a scale where even a fractional variation can reduce the number of usable chips you get out of every silicon wafer. It depends on relentless compounding cost reduction year after year. Because DRAM is fundamentally a commodity, customers buy on price and reliability, not brand. New entrants have tried and failed to break into this market for decades because the established players had such a long head start on yield and cost curves that competing was close to impossible. CXMT didn't try to leapfrog the leaders. It started by supplying more basic DRAM products into China's domestic market, technology generations behind Samsung, SK Hynix, and Micron, but it kept expanding capacity, kept refining its processes, and kept introducing newer generations of DDR and low-power DRAM aimed at mobile devices. By late last year, the company had moved production of DDR5 modules running at high data rates and LPDDR5X variants aimed squarely at smartphones and laptops, the exact memory categories Apple actually needs. The scale of that progress is now measurable. CXMT is widely regarded as the world's fourth largest DRAM supplier today, holding somewhere around 11% of global market share, according to estimates from the semiconductor analysis firm SemiAnalysis, cited in Financial Times reporting. That share is projected to climb to roughly 15% by 2028, as new production lines currently under construction in Hefei, Shanghai, and Beijing come fully online. Some estimates suggest CXMT's revenue could approach or exceed $50 billion this year alone, a staggering figure for a company that barely registered on global memory market maps 5 years ago. To be clear, none of this makes CXMT a Samsung-scale competitor. It remains behind the top 3 in advanced process technology, in total production volume, and in the kind of decades-deep manufacturing experience that makes a supplier bulletproof for a company like Apple. But Apple doesn't need CXMT to be bigger than Samsung. It needs another qualified source capable of producing meaningful volume of memory that meets its technical bar. Even a modest additional supplier strengthens Apple's negotiating position with its existing partners and reduces its dependence on a tightly concentrated group of 3 companies who right now all have better things to do with their capacity than prioritize consumer laptops. The global shortage has, in effect, promoted CXMT from a distant, easily ignored domestic challenger into a genuinely useful option for the most demanding buyer in consumer electronics. Here's where the story moves from considering an option to something more concrete, based on the most recent reporting. According to the Financial Times, Apple has already begun testing DRAM chips from CXMT for devices sold specifically within China. That's a meaningful escalation from simply exploring the idea on paper. Testing implies engineering resources, sample orders, and lab validation work are already underway, even if Apple has not committed to any commercial volume yet. At the same time, Apple is separately lobbying the U.S. government, engaging the Commerce Department directly, along with other officials across the administration and allies in Washington, to secure broader clearance to use CXMT's products more widely, not just for the China market. Reporting indicates Apple approached the Commerce Department more than a month before this story became public, suggesting the company has been working this channel quietly for some time rather than reacting to a sudden crisis. There are also reports that Apple's interest doesn't stop at CXMT. The company is reportedly evaluating Yangtze Memory Technologies Corporation, known as YMTC, China's leading NAND flash manufacturer, as a potential second Chinese supplier, this time for the flash storage chips that hold your files and apps, rather than the working memory that CXMT produces. If that materializes, it would mark a broader re-entry of Chinese semiconductor suppliers into Apple's product lineup than anyone anticipated even a year ago. None of this confirms that CXMT memory is already inside a MacBook, an iPad, or any device sold outside China. It confirms that Apple is actively building the option, running the engineering work in parallel with the political lobbying, so that if and when clearance arrives, Apple isn't starting the qualification process from zero. That's a very Apple way to manage geopolitical uncertainty, do the technical homework quietly, keep the commercial commitment reversible, and only lock in when the political ground is stable enough to justify it. The reason Apple needs political cover at all, rather than simply placing a purchase order, comes down to one designation. CXMT sits on the U.S. Department of Defense's so-called 1260H list, a roster of companies the Pentagon has identified as having alleged ties to the Chinese military. The designation dates back to an earlier administration, when CXMT and a number of other Chinese firms were flagged and, through an interagency review process, added to related restricted lists maintained by the Commerce Department. It's important to be precise about what that designation does and doesn't do. Being named on a military links list does not automatically translate into a blanket legal ban on every commercial transaction with the company. It's not the same as being fully cut off under export control law, but it does create exactly the kind of political, reputational, and regulatory exposure that a company like Apple, which faces relentless scrutiny from members of Congress on both sides of the aisle over its China relationship, cannot simply shrug off. That's the real reason Apple is pursuing a lobbying track in parallel with its testing program, rather than just quietly qualifying CXMT and placing orders. A supplier relationship that is technically permissible today could become politically radioactive tomorrow if Washington's posture toward Chinese semiconductor companies hardens further. And given the trajectory of U.S.-China tech policy over the past several years, that's not a remote possibility. Apple could spend a year qualifying CXMT's chips, redesigning logistics around a new supplier, and negotiating long-term contracts, only to have a new rule or a new administration priority block the arrangement outright. That's an enormous amount of engineering and legal investment to risk on a policy environment that can shift with a single administration decision. That's precisely why political clearance in Apple's calculation matters just as much as legal permissibility in the narrowest sense. Apple isn't just asking, can we do this today? It's asking, will we still be allowed to do this in 2 years after we've built part of our supply chain around it? Right now, nobody in Washington has given Apple a durable answer to that question. The administration has not publicly approved Apple's request, and no supply agreement between Apple and CXMT has been announced. This is a company trying to create a viable option for itself, not proof that the option will ultimately be used. Even if every political obstacle disappeared tomorrow, CXMT would still have to clear a technical bar that has nothing to do with Washington. Supplying Apple is not simply a matter of offering a competitive price. Apple's component requirements are built around performance targets, power consumption limits, thermal behavior, long-term reliability data, and packaging specifications that are notoriously difficult for any new supplier to satisfy. Memory-specific standards that have taken established suppliers decades of iteration to consistently hit. A chip design that performs well in a laboratory test environment can still fail to qualify for the kind of mass production consistency Apple demands, because passing a single test batch is a completely different challenge than maintaining that same quality across the billions of chips a full production run for a global product line would require. Apple needs components that behave predictably across tens of millions of individual devices, manufactured in enormous batches, sourced consistently over months or years. That means a supplier has to demonstrate quality control that holds steady from one production run to the next, has to guarantee volume delivered on a strict schedule, and has to be able to support Apple through product launches, sudden regional demand spikes, and unplanned factory disruptions without missing a beat. For laptops and tablets specifically, power efficiency carries outsized importance. Memory that draws more power than it should directly shortens battery life and generates additional heat that has to be managed inside an already tightly packed chassis. Reliability matters just as much because defective memory doesn't just cause an occasional glitch, it can trigger data corruption or complete device failure, the kind of headline-generating hardware problem that damages a brand for years. CXMT would need to prove, in exhaustive detail, that its products satisfy every one of those technical standards and that its factories can hold that bar at true global scale, not just for a pilot batch. Apple would almost certainly also require extensive supply chain audits, full component traceability, security vetting given the geopolitical sensitivity involved, and detailed contingency planning in case the relationship needs to be unwound on short notice. Political permission, in other words, would only open the door. Passing Apple's own internal qualification gauntlet is a separate and in some ways harder challenge, one that has nothing to do with export policy and everything to do with manufacturing discipline sustained at scale. The established DRAM suppliers are not remotely threatened by CXMT overnight. They still control the overwhelming majority of global DRAM production, hold a commanding lead in the most advanced process nodes, and have built customer relationships over literal decades that a newcomer cannot replicate on any reasonable timeline. But Apple's interest carries a different kind of weight than ordinary commercial validation because of who Apple is. Apple is arguably the single most demanding, most technically exacting, most publicly visible electronics buyer in the world. If CXMT successfully qualifies for even a limited slice of Apple's memory supply, competing manufacturers everywhere will take notice, not because the volume itself is enormous, but because an Apple qualification functions as a stamp of credibility that money alone cannot buy. It would validate, in the eyes of the entire industry, that CXMT's reliability and production discipline have reached a genuinely commercial-grade standard, not just a domestic market standard. There's also a quieter, more immediate effect that doesn't require a single chip to actually ship. Memory is a fundamentally cyclical commodity business, and in commodity markets, prices respond to expectations of future supply just as much as they respond to supply that already exists. Small shifts in the assumed number of credible suppliers can produce outsized price movements, because pricing power in a tight market rests heavily on the belief among buyers that they have no real alternative. CXMT doesn't need to displace Samsung or Micron to matter here. It only needs to weaken the industry's working assumption that Apple, and by extension every other major buyer, has nowhere else to turn. The mere possibility of CXMT entering Apple's supply chain could start influencing pricing dynamics well before any meaningful shipment volume actually begins, simply because it changes the negotiating leverage on the table. For Samsung, SK Hynix, and Micron, that's the real signal buried in this story. It's not about losing Apple as a customer. It's about losing a small but symbolically important piece of unquestioned pricing power over one of the largest and most important electronics buyers on the planet. For China, an Apple relationship, even a limited one, would represent far more than a commercial sale. It would function as a public demonstration that a domestic memory producer has reached a standard acceptable to one of the world's most influential and exacting device makers. That kind of validation tends to ripple outward. It could strengthen confidence among China's own computer manufacturers, smartphone brands, server builders, and automotive companies that are already sourcing from CXMT or considering it, effectively de-risking the decision for every other Chinese company weighing the same choice. It could also directly support CXMT's expansion plans and help the company continue improving through the simple mechanics of higher production volume. That last point deserves some unpacking, because it's one of the more overlooked dynamics in semiconductor manufacturing generally. Production quality in this industry tends to improve through repetition far more than through any single breakthrough. Higher manufacturing volume generates more process data. More process data helps engineers identify defects faster, refine yield rates, and steadily push down the cost per usable chip. A major demanding customer like Apple can therefore act as an accelerant on a supplier's entire development curve, not just by providing revenue, but by generating the sheer volume of production runs needed to compress years of incremental improvement into a much shorter window. But that relationship would cut both ways, and CXMT would be taking on real risk by pursuing it. Satisfying Apple's requirements, absorbing the pricing pressure Apple is famous for applying to every one of its suppliers, and investing heavily to support Apple's future product roadmap, all require capital and operational discipline that a company still building out its manufacturing base may struggle to sustain. Winning an Apple contract would be genuinely prestigious for CXMT and for China's broader semiconductor ambitions. Keeping that contract profitable under Apple's notoriously unforgiving cost reduction demands would be an entirely separate and much harder test. This context also connects to a broader trend worth noting. Even as Apple navigates this supply chain question, its underlying business in China has been resilient in other respects. Recent industry tracking data shows Apple's iPhone shipments growing sharply inside China, even as the overall smartphone market there contracted, a reminder that Apple's relationship with China runs in both directions, as a manufacturing and now potentially a component sourcing partner, and as one of its most important consumer markets simultaneously. This is probably the question viewers care about most directly, and the honest answer is possibly, but not soon, and not automatically. Adding a qualified new supplier can genuinely improve competitive dynamics and reduce procurement risk for Apple. If CXMT eventually offers qualified memory at a meaningfully lower price than the current Big Three, Apple could see real relief from some of the cost pressure driving this entire story. That much is straightforward economics. But several practical realities stand between that scenario and a lower price tag showing up on your next MacBook. Apple has already implemented its price increases across the current lineup. Companies rarely reverse broad, publicly announced price hikes quickly unless underlying market conditions shift dramatically and durably. Reversing a price increase is, in a strange way, a bigger public statement than making one in the first place, and Apple has strong incentive to avoid signaling that kind of volatility to its customer base. The memory market also remains structurally tight across the board. A single new supplier, even a fast-growing one, cannot instantly replace capacity across an entire global industry that's being squeezed by AI demand from every direction. There's also a scale mismatch worth being realistic about. CXMT still has to prioritize serving its existing domestic customers, while simultaneously expanding production capacity and continuing to close the technology gap with the global leaders. Any initial Apple agreement would almost certainly begin with limited volumes, or with specific products in specific markets, starting with devices sold in China, as current testing reportedly already reflects stock, rather than an immediate wholesale shift across the entire global Mac and iPad lineup. And even setting all of that aside, there's no guarantee that lower component costs, if and when they materialize, would be passed directly to consumers at all. Apple could just as easily use any savings to rebuild margin that's been compressed by this shortage, to invest further in supply chain security and diversification, or simply to avoid having to implement additional price increases down the line rather than actively lowering current ones. The most realistic near-term benefit of a CXMT relationship isn't a price cut. It's damage control, giving Apple another source of supply while it waits for global memory capacity to eventually catch up with the pace of AI demand. This is where the technology story and the politics story become genuinely inseparable, and it's worth being clear-eyed about both sides of the argument, rather than treating this as a simple right or wrong question. Some U.S. lawmakers are likely to oppose any expanded arrangement with CXMT on national security grounds, and as part of a broader, years-long bipartisan push to reduce American technology dependence on Chinese suppliers generally. Their argument is straightforward. Allowing one of the world's most powerful and visible companies to become a major customer of a firm the Pentagon has already flagged for alleged military links would meaningfully strengthen a strategic Chinese semiconductor company, handing it revenue, credibility, and manufacturing experience that could ultimately serve goals well beyond consumer electronics. Others in Washington are likely to focus on a different set of priorities: supply chain resilience and consumer cost. Their argument is equally straightforward. Blocking an available, technically qualified supplier during a genuinely severe global shortage risks raising costs for American companies and American consumers alike, at a moment when memory prices are already squeezing household electronics budgets in ways that show up directly on store shelves. From that vantage point, refusing to even consider an available option starts to look like it's punishing American buyers for a shortage that Chinese suppliers didn't create, and that AI infrastructure spending is primarily driving. Apple has to navigate both of these positions simultaneously, and its position is genuinely complicated rather than convenient for either side of the argument. The company sells enormous volumes of hardware inside China, manufactures the overwhelming majority of its products through Asian supply chains that already include Chinese partners, and depends on global memory suppliers, regardless of where its final assembly happens. At the same time, Apple is one of the most prominent and closely watched American corporations in existence, and it faces intense political scrutiny from Washington on nearly every front: tax policy, antitrust concerns, App Store practices, and now, increasingly, its China relationship specifically. The result is a situation where a memory supply arrangement that looks perfectly sensible from a pure cost and engineering standpoint can still become politically untenable, regardless of the underlying economics. And that gap between what makes commercial sense and what's politically survivable may end up being the single largest obstacle standing between Apple's current testing program and any real commercial deployment at scale. Before drawing any conclusions, it's worth being precise about what current reporting actually confirms and what it doesn't. Apple has reportedly begun testing CXMT memory chips, specifically for devices sold inside China, and is separately lobbying U.S. officials for broader clearance to expand that relationship. That much is corroborated across multiple outlets. What hasn't happened, at least as of this reporting, there is no confirmed commercial supply agreement between Apple and CXMT. There is no confirmation that CXMT memory is currently inside any device sold outside China, or inside the general global Mac and iPad lineup. The administration has not issued any public approval of Apple's request. The specific percentage figures attached to this story also deserve a note of caution, simply because they vary depending on which memory category and which time window a given report is measuring. Some trackers cite contract DRAM price increases in the range of 55 to 60% during the first half of the year. Other reporting on specific mobile-oriented memory types describes increases considerably steeper than that, in some cases describing prices that have more than doubled or nearly tripled from where they stood at the start of last year. These aren't necessarily contradictory. They're measuring different products across different windows, but it means no single percentage figure fully captures the memory price increase, because there isn't just one. It's also worth being clear that iPhone pricing had not moved at the point these Mac and iPad increases were announced, even as some reporting has floated concerns that memory costs specifically tied to next-generation iPhone models could climb sharply. Whether that pressure eventually reaches iPhone pricing, or whether Apple manages to absorb it there through other means, remains an open question rather than a settled outcome, and CXMT itself remains behind the global leaders in the most advanced memory process technology and in total production scale, whatever its recent growth trajectory looks like. The story here isn't that Apple has abandoned Samsung, SK Hynix, and Micron. It emphatically has not. The story is that the shortage has become severe enough that Apple is now actively investing engineering time and political capital into a supplier relationship it had no meaningful reason to pursue as recently as 2 years ago. Step back from the day-to-day headlines, and what this story really captures is a shift in how the entire technology industry thinks about memory. For most of the past 2 decades, DRAM was treated as a replaceable commodity, purchased from a small, stable group of established suppliers, and rarely discussed outside of earnings calls and component cost spreadsheets. Nobody outside the semiconductor industry paid much attention to memory pricing because it simply wasn't volatile enough or expensive enough relative to a finished device to matter to an ordinary consumer. That has changed, and it's changed specifically because of artificial intelligence. AI companies are absorbing an unprecedented share of global memory production capacity, and they're doing it at a pace the consumer electronics industry never had to plan for or compete against. Prices have risen fast enough and far enough to visibly change the price tags on ordinary consumer laptops and tablets, products that until recently had nothing to do with the AI industry at all, and a Chinese memory manufacturer that looked like a peripheral, purely domestic player as recently as last year suddenly carries real leverage, purely because it represents additional manufacturing capacity at a moment when capacity itself has become the scarcest resource in the entire industry. Apple may never actually complete a broad commercial deal with CXMT. Political pressure from Washington could stop it outright. CXMT could fail to clear Apple's own technical qualification bar at the volume and consistency Apple requires. The underlying shortage could ease on its own through new capacity coming online from Samsung, SK Hynix, and Micron before any large-scale shipment from CXMT ever begins. Every one of those outcomes is plausible, and any one of them could make this entire story a footnote within 18 months. But the fact that Apple is pursuing this option at all is the part that matters, independent of how it ultimately resolves. It demonstrates that supply security has become more important, at least to Apple's current calculus, than the older, comfortable assumptions about which suppliers are politically and reputationally acceptable. And it demonstrates, in very concrete and personal terms, how the enormous capital expenditure fueling AI infrastructure is spreading outward into the wider economy in ways most consumers never anticipated. Anyone buying a laptop this year is, in a very real sense, paying part of the bill for a competition happening entirely inside data centers they will never see. So here's the question worth sitting with. Should Apple be allowed to buy memory from CXMT, provided the chips genuinely meet its technical standards, treating this as a straightforward supply chain and cost question? Or does the long-term strategic risk of strengthening a Pentagon-flagged Chinese semiconductor company outweigh any short-term relief on consumer prices, regardless of how tight the memory market gets? There isn't an obviously correct answer here, and reasonable people, including reasonable people inside the US government, currently disagree about it. But the fact that this question is even being seriously debated inside boardrooms and government offices at all tells you how far the AI-driven memory shortage has already traveled, from server rooms most people will never set foot in, to the price tag on the laptop you might be shopping for right now. Apple isn't exploring Chinese memory out of curiosity, and it isn't doing it lightly, given everything it stands to risk politically by even asking. It's doing it because a shortage severe enough to move prices by double-digit percentages across its entire consumer hardware lineup has made the old, comfortable supply chain too expensive and increasingly too tight to simply ignore.